Hello and welcome to the Rooted Wealth app. Today, we're continuing our Rooted Wealth tutorial series with Step 4, the Scenario Planner. What if? The Scenario Planner is a powerful cash flow tool that allows you to see how the financial information you've entered into your budget may play out over time. It pulls information from your budget input, including your income, charitable contributions, investments, bills and expenses, credit card payments, car payments, variable spending, and savings goals. That information is then plotted according to the dates each transaction is expected to occur. Let's take a look at how it works. From the navigation menu at the top of your screen, select the Scenario Planner tab. This will take you directly into the Scenario Planner. Here you can review your projected cash flow and upcoming transactions. Here you can see plotted financial information that has already been established. We have a starting bank balance of $1,800. This represents the money currently available in the bank before our upcoming income is received. Before we continue, let me show you how to enter your starting cash balance into the Scenario Planner. Click on Budget Input and select Income. Locate the income and select Edit. Under Current Balance in Bank, enter the amount of money currently available. Once you enter and save that amount, it will automatically flow into the Scenario Planner as your starting balance for the month. Now, let's return to the Scenario Planner and see how that $1,800 starting balance is used as our transactions begin to occur. The Scenario Planner begins with that $1,800 balance and then plots the transactions that are scheduled to occur throughout the month. You'll notice several columns that help you understand what's happening. These include the target date, revised date, transaction type, category, item description, balance, amount, and running balance. The running balance is especially important because it allows you to see the projected amount of money available after each transaction occurs. For example, we have a $350 credit card payment followed by another credit card payment of $597. We also have allocations for expenses such as fuel, eating out, and groceries. As each transaction is applied, the Scenario Planner automatically recalculates the running balance. You'll also see scheduled income, along with other allocations such as charitable contributions and investments. This allows you to see your income and expenses together in one chronological cash flow view. And as we move through the Scenario Planner, you'll begin to see why the What If feature is so valuable. It doesn't simply show you what you've budgeted. It allows you to see when your money is coming in, when it's going out, and whether the timing of those transactions could potentially create a cash flow shortage. Next, we'll begin using the Scenario Planner to make adjustments and see the financial impact in real time. Let's take a closer look. As you review the transactions, you'll see allocations for variable expenses such as fuel, eating out, and groceries. One important thing to remember when using the Scenario Planner is that the changes you make here do not change or impact your original structured budget. Think of the Scenario Planner as a temporary workspace where you can test different financial scenarios. You can adjust an income amount, change an expense, or move the anticipated date of a transaction, and immediately evaluate the potential impact on your cash flow. This allows you to see whether a change could create a surplus or a deficit, and more importantly, whether the decision you make today could affect your cash flow in upcoming months. Let's say, for example, that you have $250 allocated for eating out, but you decide that you're not going to spend that money. Instead of changing your original budget, you can adjust the amount directly here in the Scenario Planner, or you can change the date. We can change the eating out expense to 0, and notice what happens to the running balance. The Scenario Planner immediately recalculates your projected cash flow. If you decide that you do want to use the $250, you can simply add that amount back, and once again, your running balance adjusts in real time. You also have the ability to change the anticipated date of a transaction. This is especially helpful when the timing of an expense changes, or when you need to determine whether moving a payment could help you avoid a cash flow shortage. Now let's look at the mortgage payment in this example. We have a $5,000 mortgage payment scheduled, but based on the timing of our current transactions, there isn't enough available cash to cover that payment. The Scenario Planner identifies that potential shortage for us. However, we can also see that additional income is scheduled to arrive shortly afterward. This is where the What If feature becomes extremely useful. We can ask, what happens if we move the mortgage payment until after our income is received? And if delaying that payment results in an additional fee, we can account for that as well. For this example, we'll increase the mortgage payment from $5,000 to $5,150 to account for a hypothetical late fee. Then we'll revise the payment date so that the mortgage is paid after the scheduled income is received. Notice how the scenario planner responds. The transaction moves to the revised date, the new payment amount is reflected, and our projected cash flow automatically recalculates. This allows you to evaluate the potential impact of a financial decision before you actually make it. And remember, these scenario planner adjustments allow you to model what may happen without changing your original structured budget. Next, we'll continue looking at additional what-if scenarios and how today's financial decisions can affect your cash flow in the months ahead. Now let's continue looking at how the scenario planner can help you evaluate the impact of your financial decisions. Remember, the changes you're making within the scenario planner are designed to help you test different scenarios. They do not change your original structured budget. This gives you the freedom to ask, what if, and see the potential impact on your cash flow. For example, if you were expecting an income payment of $4,000, but you actually received $3,850, you can update that amount directly in the scenario planner. Notice that as soon as the amount changes, your projected running balance is recalculated. The scenario planner also plots other transactions from your budget, including your charitable contributions, such as tithes and offerings, and shows how those transactions affect your available cash. Now let's look beyond the individual transactions and see what happens as we move toward the end of the month. At the end of August, the scenario planner shows the amount of money that is projected to roll over into September. In this example, approximately $6,810 is projected to carry forward. This is important because the scenario planner doesn't just help you evaluate whether you can afford something today. It allows you to see how a financial decision made this month could affect your cash flow in the months ahead. Let's look at an example. Suppose we decide that we want to make a larger payment toward our school loan. We'll enter a hypothetical payment of $6,000. At first, we may look at August and believe that we can afford the payment. However, when we continue into September, we can see that this decision creates a projected cash flow shortage. That's valuable information. It tells us that even though we may have enough money to make a payment today, doing so could create a deficit later. Now let's adjust the payment and see what happens. When we reduce the school loan payment, the scenario planner recalculates our running balance in real time. We can continue testing different amounts until we identify an option that does not create an ongoing projected shortage. This is one of the most powerful benefits of the scenario planner. It allows you to evaluate the impact of changes to your income, expenses, payment amounts, and payment dates, not only for the current month, but for upcoming months as well. Before we finish, there is one very important step that you must remember. Anytime you make changes in the scenario planner, you must save your changes before exiting the screen. Select Save Changes, and then wait for the save process to completely finish. Do not leave the scenario planner while your changes are still being saved. Wait until the Save Changes button returns to green. You also have the option to export your scenario planner as a CSV file if you'd like to review or maintain a separate copy of your information. In addition, you can create reminders directly from this area. For example, you might create a reminder to transfer money from your savings account to your checking account before an upcoming bill is due. You might also create a reminder to cancel a subscription or complete another financial task. These reminders can then appear on your Rooted Wealth dashboard, and once you've completed the task, you can close the reminder. And that concludes Step 4 of the Rooted Wealth tutorial, Scenario Planner. What if?